Hello, today we are going to discuss about the admission of a partner. This is part of reconstitution. That means today we are going to discuss reconstitution. What is reconstitution? So, when you have partnership deed, we are through with the fundamental of partnership. So, when you are starting your business in partnership, so you are preparing a deed and you are starting your business. So, whenever you are making change in your partnership business, right? So, there would be change in partnership deed or your agreement among the partners, so that is called reconstitutions. So admission falls under that category wherein a new partner comes in. So what is admission? Admission is a situation in which in the existing partnership a new partner is coming into and he becomes the partner. So that is called admission of a partner, and this is part of your reconstitution, right? Because the profit sharing ratio amongst the partner gets changed. Now at the time of admission, what are the things we have to adjust, right? So I'm writing here adjustment. So what are the adjustment you have to make when the partnership changes and there is an admission of a partner? So admission of a partner, you have to change in PSR, profit sharing ratio, right? So you will have change in profit sharing ratio. Then obviously there would be some retained earnings, or you can say accumulated profits, and then you will have certain deferred expenses, right? That needs to be write off. Then you will be having goodwill that needs to be treated in the books of account, and then you have revaluation of assets and reassessment of liabilities. So what are the assets and liabilities are there, you have to revalue and reassess. And then obviously adjustment in capital if agreed amongst the partners. So what you have to do is you have to again adjust the capital of the partner who are already partner in the partnership firm, that is old partner or existing partner, you can say, right? So there would be some words which are going to be coming into your admission. So first, what is admission? Admission of a partner is the situation in the partnership firm when a new partner comes into the partnership firm and the existing partner sacrificing their shares. So you will have the new word which is called sacrificing and gaining ratio, right? So what is sacrificing? When a new partner comes into the partnership firm, let's say A, B, C and D are partner 25, 25 and 25%, and a new partner comes into, so obviously he will take some of the profit share of the partnership firm, and somebody who are existing partner, they have to give or sacrifice their share to the new partner, then he will only become the partner, right? So sacrificing ratio means, sacrificing ratio is the ratio in which existing partners or any partner give their share to इनकमिंग पार्टनर को जब अपना शेयर देते हैं So जो भी whatever the ratio is there, so if the deed is silenced, then obviously they have to give according to their old profit sharing ratio to the new partners. और अगर कोई नहीं, अगर agreement है, so accordingly, let's say I have given the example A, B, C, D, 25% partner each. So let's say D is giving 5% of his share to Mr. E, who is coming into the partnership firm. So he will be the sacrificing partner. D would be the sacrificing partner and E would be the gaining partner, right? Let's say nothing is being mentioned, then obviously all the partners are equal partners, so they will give equal proportion to Mr. E from their share. So that is called sacrificing ratio, in ratio in which the existing partner or any of the partner or combination of partners are giving ratio to the profit sharing ratio, some of the profit sharing ratio to the new partners. Now gaining ratio is the ratio, और यहाँ पे gaining ratio or gaining is new partner. So obviously if you are entering more than two partners, then you will have ratio among the partners. Otherwise, if you are entering only one partner, then he will get a certain profit sharing ratio and he will receive that, and he will be called gaining partner in that situation, right? So this is your gaining and sacrificing. Then comes goodwill, right? So whenever the new partner comes into partnership firm, so what happens? There is a name frame to the partnership firm which has been brought up or which has been created by the already existing partner. So what happens? Whatever the goodwill is there, so according to the partnership ratio or profit sharing ratio, the new partner has to bring in that amount of premium for goodwill, and that amount has to be paid to the sacrificing partner. So what is goodwill? So goodwill is the earning capacity of the firm by which the firm earn more compared to the competitors or the peer on the same investment they have made. ठीक है, अगर 1 लाख रुपए लगाए हैं, somebody is earning 12% and somebody is earning 10%, so obviously that person who is earning 12%, he has some goodwill, and that is equivalent to 2%, extra 2%, right? So goodwill, there would be we will understand in detail. I will let you one by one because I'm taking you through the chapter admission of partner, but we will have the one by one, or I have already uploaded some of the videos, so you can go through that and you will understand that what is exactly the accounting treatment in the admission of partner or related to the partnership firm. So goodwill he has to bring in. So there might be 3 situations: either he will bring goodwill, or he will not bring goodwill, or he will bring goodwill in some of the kind, right? If he is bringing goodwill, the entry would be the new partner bringing goodwill cash account or bank account debit for goodwill to premium for goodwill account, right? And that will be distributed among the partner, right? So चलिए ले लेते हैं premium for goodwill account debit to sacrificing partners account, right? And in what ratio? In sacrificing ratio. ठीक है, in sacrificing ratio होता है. So if he is bringing in goodwill, if he doesn't, अगर वो नहीं लेके आता, ठीक है, और अगर वो part of goodwill लेके आता है, तो let's say if he doesn't, अगर वो नहीं लेके आता, if doesn't bring goodwill, so what happens? What will be the entry? Right? So what we have to do is, if he doesn't bring, we have to adjust his the partner's claim against him through his current account. So क्या हो जाएगा यहाँ पे? New partner's current account because we cannot adjust fundamentally from the capital account because capital will be reduced. So we will do through the current account, and that will be having the debit balance, and which will be shown in the asset account, asset side, right? So new partners capital account debit to sacrificing partner. Whomsoever is sacrificing partners, their capital account or current account as the situation on the basis of which we are preparing the capital account, so that account will be there. So sacrificing partner in their sacrificing ratio, right? This is in the situation when the new partner is not bringing in capital, right? Goodwill. If he brings in some part of goodwill, let's say he doesn't bring 20%, 20% doesn't bring. So for 80% we will do this entry: bank account debit to premium for goodwill, and premium for goodwill account debit to sacrificing partner. And for 20% we will do this entry, right? For 80%, for 80% we will do first entry, and for 20% which he is not bringing, second entry, right? And for detail of goodwill we will have a separate video. You can go through that and you can understand, but this is the thing you have to go through right here, right? So this is the goodwill and treatment of goodwill. And if there is any goodwill is already existing in the books of account, that needs to be written off. Let's say if goodwill existing in books of account, let's say the partner is entering and the goodwill is shown in the balance sheet, right? This is your balance sheet, and here the goodwill is shown, right? Goodwill is here. So what you have to do is you have to write off this goodwill at the time of admission. And what will be the entry? Old partners capital account debit to goodwill account. So this would be entry to write off this already existing goodwill at the time of admission of a partner. If goodwill existing in the books of account, that means you at the time of admission straight away take this goodwill and write it off from the books of account. This is the first thing you have to do, right? So this is your goodwill. Then there are certain kind of retained earnings. So retained earning or accumulated profit, retained earning or accumulated profit. So retained earnings are the earning which has been retained rather than distributing to the partners. You are having the profit during the year or the last few years, but you are not distributing the whole amount to the partners. Rather, you are keeping that into the books of account as general reserve, profit surplus in profit and loss account, and any other reserves. So that is called accumulated profit or retained earning. That retained earning, because this is the effort of the old partner, so we cannot keep the new incoming partner into the advantage or disadvantages. So whatever is there of the retained earning, that has to be given to the partners, old partner, in old profit sharing ratio or as agreed among the partners. जो भी उनके बीच में agreed होता है, इसका treatment जो होगा we will see into the another video. ठीक है? So retained earning, that you have to take the treatment of, you have to adjust the things. Either you have to distribute to the partners, old partners in old profit sharing ratio, or whatever the agreement is there. Let's say if they are saying that okay, we will keep the retained earning as it has been for last few years, so we will keep it forward as well. So you have to take the adjustment entry, right? And similarly, we will have deferred revenue expenditure, right? Sometime you must be seeing in your question advertisement suspense account or profit and loss surplus in profit and loss account in the asset side. So what is that? That is deferred revenue expenditure and the accumulated loss, so that has to be written off from your books of account, right, at the time of admission of partner. So your partner's capital account will be debited. So old partners capital account will be debited, and to whatever, let's say advertisement suspense accounts is there, or let's say profit and loss account debit balance is there, so you have to credit it and you have to write it off straight away, right? So this entry you have to take at the time of admission for the accumulated loss or accumulated profits, whatever are there. So goodwill we have already done away with. Then revaluation of assets and revaluation of liabilities. Now what we have to do is, so what happens at the time of admission of a new partner, we are not certain about what are the actual market value of the assets and what are the actual liabilities. Let's say some of the creditors are not there to claim that liabilities, or some of the creditors are giving heavy discount to pay off their liabilities because they are closing up their businesses. So what happens in that condition, the asset might be up in the market value, the liability may be gone down, right? So we have to find out the correct picture at the time of admission of the new partner. So an account is prepared, that is called revaluation account. So what is revaluation account? Revaluation account is a nominal account. This is nominal in nature, and this is created to find out the actual value of the assets and the liability, and find out the profit and loss because of the valuation of the assets and the liability, right? And that profit or loss, whatever happens, that is closed by if the profit happens, that is distributed to the old partners in old profit sharing ratio, and if there is a loss, revaluation loss, that is set off against the capital of the old partners in old profit sharing ratio. Now how do we prepare that? This is the way how you prepare that revaluation account, right? So as we prepare any other account in accounting, so any kind of loss, so this is debit side, so all the losses, and this is credit side, all the gains, whatever happens, right? So we can say decrease in assets. Okay, any decrease in asset will be lost to the partnership firm, so that will come here. Any increase in liabilities में increase होता है, that is also loss. 100 रुपए देने थे, आप 200 देने हैं, तो this is 100 rupees loss to you. And any unrecorded liability, if you forget to write in the books of account any unrecorded liability, you have to recognize right now, so that is also a loss to you. ठीक है? और here increase in asset, so any asset which is increase in the value, the market value of the asset has increased. Land is you have purchased for 10 lakh, now that is for 20 lakh rupees, so you have gain of 20 lakh rupees, so that will appear over here, right? And any liability which has gone down, if you have to pay originally 500 rupees, now you have to pay only 200 rupees, so you have 300 rupees gain because you are paying less, 300 rupees, so that is gain coming over here. And any unrecorded asset, if you have forget to write any kind of assets into the books of account and you are taking it right now, so what happens? Your books of account asset value will go up, and that is your profit, right? Gain. And that whatever the profit or loss happens, revaluation profit will come over here, right? Excess of credit over debit will be your gain, and that will be distributed to the partners. Rather, I will write old partners, okay, in old PSR, right? Old partners, old PSR. If we have excess of debit over credit, that means we are having excess loss compared to the gains, so we will have revaluation loss, and that will also go to old partners, obviously, right, in old PSR, profit sharing ratio, that will be distributed in the old profit sharing ratio. So this is the way how we are going to reevaluate the asset and reassess the liability. That will be given in the question. So we will do that when we are going to do the practical questions. So we will understand how we are taking the effect into the revaluation account, and that goes to your capital account as well as in the balance sheet, right? So this is your revaluation account which you have to do at the time of reconstitution, that is admission of partner, right? The third thing, when the question gives you there is adjustment in capital of partners, right? So there are three ways by which we are going to adjust the capital of the partner. I will make separate video for that. You can go through that. Right now you can just understand the theory part of that, adjustment of capital of the partner. So sometime what happens, the capital is adjusted on the basis of old partners capital, right? जो भी old partner है उनकी capital के basis पे, sometime on new partners capital, right? And sometime on the basis of PSR. So how do we do that? On the basis of old partners capital. So what we do that in that condition, find out the capital, find out capital of old partners, right? Multiply by their share, multiply by with their share, and find out the total capital. Find total capital of firm. So let's say old partners, now we have given let's say 10% to the new partners. Now the old partners are owner of the 90% capital. So whatever the capital of the old partner is 90%, make them 100%, right? Let's say 900 is the capital. So and 90% is the value, right? So make them 100%. So what would be the capital of the new partnership firm at the time of admission? 1000 rupees. So on the this is the 1000 rupees. Then we will give to the different partners on the basis of their share, right? And accordingly, if any partner shares is less and their invested value is more, he will take away the excess amount from the partnership firm. If any partner has invested less and his share of capital is coming more, so he will bring in extra amount of capital. New partner will bring the capital to the partnership firm, right? And on the basis of new partner, okay, let's say in this condition, E, what the example I have given, example, as per example, E has been given 10%, right? 10% share, and he is bringing, let's say 2 lakh rupees for 10%. So what would be the capital of the partnership firm? So on the basis of new partners share, we are finding the total capital of the partnership firm. So that will be 20 lakh rupees. अगर 10% 2 lakh rupees है तो 100% कितना हो जाएगा? 20 lakh rupees, and 20 lakh rupees will be settled between the A, B, C, D, E as per their profit sharing ratio. Whatever the profit sharing ratio is, and excess and less, they have to be either bring in cash or they will take away the cash. Or sometime what happens, the profit sharing ratio is given, right? Let's say 4 partners are there and we have been given 4, 3, 2, let's say this is 1, right? 9 और एक हमारा E आ रहा है तो वो भी E हो जाएगा. Let's say the new partnership ratio is this 4, 3, 1, 1, 1. ठीक है? So this is the ratio, and on the basis of this you have to adjust the capital of the partnership firm. So आपको क्या करना है? You find out all the capital of the existing partner and the new partner and take it to, total together, and then distribute like this 4, 3, 1, 1, 1. You will have lots of questions about that when the PSR is given and you have to adjust the capital of the partner. So same thing will happen. New partner will be bringing in the same amount, because he will you will be telling him this much of money is required from you as per the new profit sharing ratio. And all existing partner, their capital account needs to be adjusted, and the situation will be same. Somebody will have more capital invested and they have to take away the cash. Somebody has invested less amount, they have to bring in cash. So this is you have to done in the adjustment of the capital. So these are the things you have to do in the at the time of admission of a partner, right? So how to find out the what is the meaning of admission? This is part of your reconstitution, sacrificing and gaining ratio. We will study, right, how to find out the sacrificing and gaining ratio. Here in admission, how do we find sacrificing ratio? Sacrificing ratio, so your old ratio minus new ratio, you will get sacrificing ratio, right? Your old will be, because some of the partner, let's say if somebody has given his 10%, he was holding 20%, now he is holding 10%, he has given, so he is holding 10% now. So what is sacrificing? 20 minus new 10%, so he will be holding, he is having 10%. So this is sacrificing ratio, old minus new. So this is the formula. Same reverse that formula for the gaining ratio. Then goodwill, I have told you, retain earning, all those earning which has been kept in the business rather than distributing to the partners. Revenue, deferred revenue expenditure, all those expenditure which are not been written off for last couple of years or last year, that needs to be adjusted. Then revaluation account needs to be prepared for all the assets and the liabilities to find out the exact correct market value of asset and the liability, and then you have to adjust the capital. And this is the things we have to do in the admission of a partner, and one by one we will take it through. And how do we do that? And once you are through with all those things, let me tell you one thing, not only you will be able to do the admission, rather the profit change in profit sharing ratio chapter and death and retirement, a bit adjustment is required, then you would be able to do all those chapters with least number of questions. So one by one we will doing that, and you can go through all those videos, and definitely you will be able to get the success in getting highest marks, right? So this is it for today. Thank you very much, right? So we will be seeing in the next videos.